Price action, price action, price action. I mean, you'll hear that. It's kind of like in real estate, location, location, location. But when you're talking day trading and swing trading, basically under that, umbrella of short-term trading, one of the biggest things that trips people up is they'll focus on maybe the story, the catalyst, the news, the overall market, the S&P, the Dow, the trend, etc. But what really trips people up is at the end of the day, when you're talking day trading or swing trading, you have to recognize the trend and the price action over the sector or the news or any of that. And I'm sure many, actually drop me a comment below. Have you done this? Okay, this is one of the biggest mistakes that newer traders make. I made it many times when I was getting started. I've been day trading 18 years. The first 3 or 4 years, I still have PTSD from some of these mistakes from 15 years ago, okay? But let me know if you've made this mistake where you get into a stock and you even, you even did your due diligence. You did your research, you wrote a trade plan, and the stock goes against you. And now, what do? You break your stop, okay? It happens. You're a new trader. Get with me, I can help you fix that. But you break your stop, what do you start doing? I bet some of you are commenting right now. You start Googling for news. You start going to like their web page. You start asking people on Twitter, hey, you see some prominent guy on Twitter and you're like, hey, what do you think of this stock? And like you're trying to find something to give you an excuse to not respect the price action, okay? This stock was steadily uptrending for days or weeks. It broke a key level and then it slammed back as soon as you bought. That is the mistake, okay? And this all specifically applies to once you're in that trade. And no amount of Googling, no amount of asking prominent traders, no amount of going to their webpage or looking at their financials or looking at the SEC filings is going to make any bit of difference. You're ignoring the price action and you're choosing to stay in that stock. Now, on the flip side, this goes for trading goals as well. Like you need to understand, and we specifically use the 5-minute chart on a 5-day pattern and then the 15-minute on a 15-day pattern and then the 1 year, 1 day, and we align trends, okay? Not to get too technical, but if that just sounded like gobbledygook using multiple time frames and candlesticks and trend lines and stuff, if that sounded like gobbledygook, click that link below. It says it's going to be a link to the daily income trader system. And when you go to that link, it's going to be live. Okay, this is an awesome video. I love doing YouTube, but these are pre-recorded. I can't answer questions live. On the live webinars, 100% free, mind you, we can go over this stuff together every single day. Hit that link, no commitment. You just drop your email, your cell phone. You can jump on the webinars all through the day. We can talk about all this, some of the more technical stuff that I mentioned. But when it comes back to goals, if you don't know how to, again, chart out price action, drop lines, look at chart patterns, you will so often be out early. Like again, I go back to the PTSD of the first 3 to 4 years. Once I kind of got profitable, I would say probably year 3 or so, for years after that, my biggest struggle was just being out way too early. Like I would, I would see, there was a term that you might hear like, see green, take green, which is not a bad idea if you're a scalper, but that see green, take green idea just gets you out of so many trades, so early. And I'm sure back to quotes, I'm sure you've all heard cut your losers and let your winners run. So for several years after that kind of first foray into profitability that I hit, my biggest struggle was scaling up. Like I went from losing money all the time, which is probably you guys. Again, we can fix that. Check out the daily income trader system. To now I was profitable, but just puny gains, like $100, $150, $500. I could never scale. Well, not never. I figured it out, but I struggled to scale up because I was starting to trade bigger size, but because I couldn't understand price action, I couldn't map out trend lines, I couldn't recognize chart patterns. I would see green, take green, and then I would be right, and then that stock would continue all day, gap up the next day, and go parabolic for the day 3 surge. And I'm like, wow, I nailed this one, but I made $100. So that is why price action is so important, both from the stop loss as well as the goal area. Now, the last point I will make is, what's the best way to manage that? And I'm telling you, this will change your trading. write down your trade plan before you enter the stock. Now, there's a lot of components that go into trade plans. Again, check out those webinars. It's difficult to break down that whole training of writing trade plans in a short video. We do it every day. Everything should be mapped out. You should know your entry before you enter. You should know your stop before you enter. And you should know your goal before you enter, all based on the price action and the trend. Then the last contingency is, I'm guessing, well, I'm not guessing, but I know, 99% of you have small accounts. One thing you should also have, if you have a small account, which would be less than $5,000, less than $10,000, you should also have a boredom contingency. What that boredom contingency is if that stock that you buy basically does nothing, like let's say it goes up a penny, down a penny, you're coming into the end of the day, it's 345, you need to have a contingency for a sideways stock. Now it could be, maybe you hold the stock overnight if it's got all the right catalysts and the right news and the right volume, or a lot of the time with these speculative stocks, they're never overnight holds, so you would take the boredom contingency and you would take that puny loss or that puny gain or that break-even trade because you've planned that out. One of the biggest things that I see so many newer traders struggling is the saying that random trades gets random results. And on top of that, random trades gets random results. On top of that, the definition of insanity is doing the same thing over and over again and expecting different results. That's what I see. No plan, day in and day out, random trades, day in and day out, and somehow thinking that without being a professional, without planning your trades, without writing it down and being disciplined, like magically you're going to be profitable. Sooner you figure that out, sooner you respect the price action and not going on Twitter and chat rooms trying to bail you out, the sooner you're not seeing green and taking green for puny gains on steadily uptrending stocks, is the sooner you'll get to the point where you can really start crushing it in trading. And that being said, best way to really start crushing it, check out that Daily Income Trader System webinar below. 100% free, 100% live, 6 times a day, even on weekends. You can jump on the time that works for you and you can learn how to trade these explosive stocks.